Hi, today is Monday the 25th, and this is the weekly recap for the Rhino end of Jan. And we start with the Feb cycle. January was closed about 10 days ago, and this February trade is doing okay. Last week I only rolled this CCS, basically applying a cold butterfly here just to move the short to 41.25. It was a preventive adjustment because the market was grounding up a little bit too fast, while the trough on the IV skew is only going slowly back towards ATM. So I estimated that the danger zone would be around maybe 39.50, 4,000. So I wanted to be safe on this. I partly paid for it with a PCS roll, and now we have a fairly safe position. And basically what we need to do, we have 25 days, or just about, let's say 3.5 weeks to expiration. Now it will be a matter of simplifying the trade and mostly reducing capital usage. 19,000, it's a little bit high now in its descent phase, but of course you don't want to lose too much theta. This type of wide combos already have a little weakness in terms of theta, although it is very, very safe otherwise. And I'm happy with 912. I would be happy with $800, so just above 2% on 38K planned capital. So basically, it will be a matter of doing some PCS rolls here. Considering that I trade now larger amounts, I may have to go for straight verticals, but it is more a personal matter for my trading style. So on this trade, nothing much except just simplifying and reducing. Of course, the market can still go much higher if we have a strong surprise in earnings or on the large stakes. Otherwise, this trade should be easy to manage towards the end of its life. So nothing much here. And from February, let's move on to March. March is also pretty good. I mean, we are now at a potential profit of just about 2%. The trade is not doing great, but at the same time, it is fairly safe. I added 3 iron condors just to lift this tent here. The delta is okay. Theta is actually okay for it's 53 DT, again considering it's a very wide structure, so really nothing much to do. If the market stabilizes in around these high grounds after the earnings season is over, I may go back towards more butterfly adjustments, so adding smaller structures. If volatility is high, I will stick to 125/100, in particular for the April entry coming soon. Now on March, we are at 53, so generally, unless volatility is very high, I start reducing to 100/75, and maybe around 30-40 GT, I would go towards even narrower, basically the 75/50 butterflies. So on this trade, very simple. I could actually leave it here and do like virtually nothing. Of course, like for Feb, I will monitor the IV trough here, which is probably a little higher still. This Q hasn't really formed, so I would have to be careful there. But these ones are still pretty cheap at about $1. Of course, they have a lot of time value left in that. So if the market really moves up and if it reaches the 3900, which is a very strong resistance now, I will start doing some risk reversal just to be on the safe side. Okay, for the April entry, volatility isn't too bad. So I will definitely look for, volatility is around 23, 22, 23. I would probably try and place maybe a little higher. So let's say 35, 75. Let's see how this one would look like. This looks like a fair, it's about $100. That looks like a fair type of entry. Of course, again, the variable theta, and one could be tempted to start lifting the upper expression line at inception with a CCS, which would be priced okay. And if you look at 40 to 75, 4,300, we have $1.2. So that's also something we could consider if we stick to this type of approach in a market that is bullish with a fairly high volatility. So this is a planned entry for April. This would use 2.5K. I think I can afford an entry without aggressively reducing February, which is good. Okay, that is it for now. For more detailed updates, any questions, please contact me on Slack, where I'll deliver daily updates on the SPX outlook and current trades. Thank you for watching, and bye for now.